Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversation with Egon von Greyerz of goldswitzerland.com, a gold vaulting service. Egon, welcome back.
Thank you, Max. Good to see you again.
So, Egon, we've talked a few times about central banks and their tenuous grasp on reality as they print the world into financial oblivion. There does seem to be one standout. One bank seems to be going the other way in raising rates. That would be the Bank of Russia. What do they know? Or are they making a colossal mistake, Egon?
Well, Max, yeah, there are some central banks who understand what's happening, but they are exceptional. And as you say, Russia, had quite a substantial holding in U.S. Treasuries, for example, liquidated those in the last few years totally. And they have continuously built up their gold position substantially from their point of view. So they know what's happening. And there you have a president that doesn't have to buy votes, of course, in the same way. People do vote, but it's, as we know, until now, at least, Putin has had no problems in winning any election, however that's done. So they don't have to please the people, and therefore they're doing what every central bank should do. It's been said in the last few years that central bank buying of gold has gone up. Well, that's not quite true. It has from some countries, but if you look at the Western countries, if you look at the US or any European country or Western European country, nobody has bought gold. They haven't bought gold for years. I mean, they all liquidated their positions in their 90s, as we know, and to push the price of gold down from what it was at the peak in 850 down to eventually 250. So, and that was countries like the UK and Switzerland more than half their positions. So central banks, they have a love-hate relationship with gold. On the one hand, they have to hold it, and they hold about 34,000 tons of gold. But on the other hand, they want to suppress the gold price because the gold price tells their people that they're mismanaging the economy. And so far, they've done a pretty good job in holding the gold price well below where it should be. I often show a graph, Max, where I compare the gold price to the U.S. money supply and going back to 1970. And if you look at the gold price in 1970 or 71, if you want, was $35. The gold, and then in 2000, it was $290. The gold price today at 1,800 in relation to US money supply is as cheap as it was in 2000 at $35. And sorry, in 2000, in 71 at $35, and in 2000 at $290. So gold is incredibly cheap in relation to the money printing that we have seen in the last 20 years. And that is as a result of central banks through the BIS that issues gold swaps. The central banks are then managing to hold the gold price down in the paper market. And as we know, I mean, paper gold has nothing to do with physical gold. And at some point, the real price of gold will be reflected when the central banks lose control of that paper market, which is probably several hundred times bigger than the physical market.
Yeah, I've heard those numbers before. They bear repeating. They're so phenomenal. So gold, relative to the money printing, is as cheap today as it was in 71 at $35 an ounce, and as cheap as it was in the year 2000 at $290 an ounce. At $1,800 an ounce, that's how it's cheap at those levels relative to the amount of money printing that's gone on. And you mentioned that there hasn't been any real price discovery in gold now for really 15, 16, 20 years due to the machinations of these bankers because they like to support the fiat money. It appears as though price discovery won't happen, but we're going to have, quote, a reset. And we're going to have a new Bretton Woods, according to the IMF, that we need a new Bretton Woods. So it seems, Egon, that they don't want price discovery, but they want to be able to sit around a table and re-architect the global economy. They won't be able to avoid gold. Gold will have to be part of that conversation.
You know, I've been talking about and writing about the reset, and you know, there are many resets that are being discussed. You know, you have on the one hand the central bank, and then you talk about the World Economic Forum. But in my view, there might very well be a reset from Western central banks. I don't think Russia or China will be in on that at all. So therefore, you know, it has a very low chance of success. But nevertheless, they will try it most probably, and they will fudge it with maybe a new digital central bank, digital currencies, etc. I think, as all manipulated situations, that one would fail too, and they might reset gold to $10,000 or $20,000 or whatever at the time in order to write down the debts. But I am not a great believer in manipulation. Anything that is unnatural is not going to last for a long time. And here the world is in such a mess, so they're going to try to just make the debt disappear, which they're not going to succeed with. So I think that the real reset will be a disorderly reset when markets are repriced based on supply and demand and based on real money, and that will be the nasty one. That will be when the debt implodes and currencies implode, and stock markets also, of course, in real terms implode, and bond markets too. That is going to happen. I'm absolutely convinced. I'm not a prophet on doom and gloom. I just I study history, and I know that. Just as it has happened in history regularly throughout time, it's going to happen this time again. And therefore, sure, it could take another few years. I think we're pretty near. The world has never been in a situation where every single nation is bankrupt and every single nation is printing money. And you know, you just take now the money printing that's taken place since 2019, you know, central banks have gone from what, 14 trillion, I think, the three biggest central banks, 14 trillion balance sheets to 24 trillion, gone up 10 trillion just in the last year and a half or 2 years soon, since the crisis started in August, September 2019. So it's coming, it's inevitable, and I think we are quite near now. But I have patience if I have to wait a little bit. And you know, I don't want it to happen, but I'm just studying history, and I know it will happen. It's only a matter of time.
That's interesting that you said that, oh, yeah, they probably will try a new Bretton Woods, but Russia, China would not be part of it. You know, that's fascinating to think that type of meeting could happen. Meantime, it seems like more and more the country setting the price for labor, for goods, even for gold, is China. So China seems to be the price setter now, less and less the United States. The United States used to really set prices around the world, and they're ceding that now to China, who's also exporting a lot of cultural soft power, as it's called. Are we, you talked about the history, and we mentioned the Thucydides trap, where one empire gives way to another empire. Are we at the moment now in history where the U.S. empire, which has been roughly 100 years, is giving way to China? Egon?
Yes, I think that's inevitable. China has its problems too. China has debt problems too, and they got to sort that out. But relatively, it's much easier for them because most of their debt is internal, so they can deal with it. They don't need the whole world. They haven't got a petro or a petro yuan. They have a domestic one that can easily be dealt with, and you know, they are already conquering the world, as we know. You know, I looked at the graph, and I think it was back to 2000 when the main trading partner of most countries in the world, 75 countries, for 75 countries, that was the US. Over 75% of all countries, that was the US, the main trading partner. Today, 21 years later, it's China that is the main trading partner for 75% of all countries in the world. And the US gone down to 25% from 75%. You see, it's happening already, that China is taking over. And, they're buying everything they can, as we know. They're buying into all kind of natural resources in Africa and South America, etc. They've been doing that for years and years. They're buying ports everywhere in the world, and they are buying control of major infrastructure in the world. So yes, they are going to be a powerful nation, definitely from the point of view of trade and industry. Are they also going to be powerful militarily? Well, we don't know, but certainly there's a bigger risk for the Southeast Asia region, in my view. That you take anything from New Zealand to Australia to Singapore, etc. I mean, I think they are physically quite near. I'm not an expert in that field, but I would say that yes, China is going to, over time. It takes time. Empires don't shift overnight. It takes a long, long time. But China is gradually, as I just said, we're looking at the trade. They're on the up and in a big way. And yes, and that will continue faster than anybody can believe.
Since you're in Switzerland, you might have the inside dope on this. The Swiss central bank, are they experimenting with a digital currency?
Well, they are, like every central bank. But, in Switzerland is still, I'm right now, I'm in Sweden, summer holiday, and it's the Baltic behind me. But Sweden, of course, has no cash at all, basically. You can't, in many shops, if they don't take cash, can't use cash. It's only credit card. The central bank in Sweden has even warned that, you must have some cash. Otherwise, if there's a crisis, you're not going to be able to buy things. Now, Switzerland still uses cash and still is a conservative country. So I think Switzerland might have a digital currency too, but it's going to take many years, and it's not going to be exclusive to normal money, in my view.
All right, we're going to cut it off there. Egon von Greyerz, thanks so much for being on Keiser Report.
Thank you, Max. Good to see you again.
All righty, that's going to do it for this edition of Keiser Report. With me, Max Keiser and Stacey Herbert. I want to thank our guest, Egon von Greyerz of goldswitzerland.com, a gold vaulting service. Until next time, bye, y'all.